Hey everyone, welcome to Modern Money Method. I'm glad that you're here today. Happy New Year to everyone. We're in 2023. Wow. I think of a lot of things in the future, but I can let you know right now when I was celebrating New Year's uh, Eve 1999 and 2000, I wasn't thinking 23 years in the future. Time sure flies, huh? So, what I wanted to talk to you about today was a topic I guess I've been bringing up for, let's see, 15, 16 months now. Late summer 2022, I was sounding the alarm bells, and then I was banging the gong in November of 2021 to basically get out of all stocks. Um, I saw no path upwards for stocks. Everything was extended. PE ratios, uh, they were everything was pumped up. Earnings had just been skyrocketing from all the free money, and they weren't handing out more free money. So, it's kind of like, giving your kid a few $100 on their birthday or Christmas, and then maybe they revert back to their, $10, $20 a week allowance for chores. They really blow that money the first few weeks you give it to them, right? So, the government gave us trillions. So for a year or two there, it was sure a party in America. Sales and profits for everyone was through the roof. And you could just see the writing on the wall that that was going to tail off. Savings rates going down, no more $1 trillion handouts. And yeah, so what I'm going to kind of talk about is negative, but I want to say kudos to the I think about 2% of you listen to me. I wish it would have been 98%. But if you're in the boat with the 98%, well, you're in the boat with the 98%. So you're not alone. Might feel like you are. And sorry if you had a really rough 2022. Yeah, I had a few people take my advice. They questioned me. And I just told them, I said, I saw that there would be nearly no regret, no possibility of having regret of getting out of uh, assets late 2021. Sorry, kind of hard for me to keep saying that year because we're in 2023. So, what I have here on this chart is why you feel like you lost in 2022 and why I warned you. And what I have here is these stocks here, 11, I guess I have 11 stocks here. At the peak of their value, these 11 stocks represented about 25% of all the assets, um, stock assets in America at their peak. So that means that one out of every $4 invested, the trillions and trillions and trillions, was in these stocks. Possibly you had 50% or 75%. I know a lot of friends that were riding the Tesla, uh, you know, out there to the moon. Maybe they're going to send a Tesla out to Mars someday. A lot of people, made a lot of money on Facebook. That stock went up a long, long time. And we got Tesla down 69% in the past year, Facebook down 64. And no small losses on these other, stalwarts. Microsoft and Apple, the big boys, they lost 28 and 29%, It's crazy that the Dow Jones only lost 9% and the S&P lost 19. I think that's kind of hiding the fact of how rough of a market it was. So these stocks here that represented 25% of the total market, we have some different ones here. We got Walmart, Home Depot. They are not 100% tech, but they declined 32%. So if you were in the FANG stocks or if you were in the high flyers, um, I do feel for you. And then if you went into, the stuff that they said was the new economy, we got Peloton, Zoom, Carvana, Open Door, anywhere between minus 63% and 98%. I mean, come on, selling cars out of vending machines. Sorry, I so wanted to short that stock, but I don't even know if I would have survived because that thing kept going up after I wanted to short it. I think it went up another 100%. I don't remember the exact stock price, but it just was unbelievable to think that there's profit margin in having individual cars driven to people's homes. Why do car lots exist where you have to go and, look at the cars and the employees are there? So that model has been around forever, and all of a sudden someone just got the idea, wait a second, we can bring the car to their door. Well, there's no way you can make enough money. That you got the driver, you got the truck, you're taking on all the expenses. Anyway, an Open Door, that was just a scam. If you guys didn't figure out that one a couple years ago, they were just used as a front to maybe I shouldn't go there, but I mean, if you kind of look at their business model, they were buying 10 to 20% of the homes in neighborhoods and consistently paying 1% more for similar homes month after month for the last 3-4 years. I mean, were you out doing that? Were you out, were you buying a house for $350 and then the next year going, man, I would love to buy that exact same house for $400? And a year later, man, I'd like to buy that exact house for $450. So they are what I refer to as a ghost buyer. Now, not all stocks lost. So if you got defensive quickly, ExxonMobil, big oil company, up 74%. United Health up 5%. So not all stocks went down, but you had to definitely get into the boring no-name ones. So just wanted to show this. I don't know if anyone else has, displayed that 25% of the market took beating like that. And I want to show you just what the charts look like. Well, here's the Carvana one. I mean, you can see how ugly this can get. This thing was at 200. I mean, this patient is dead. Down at 468, down $193 a share. Let's see here. I think, yeah, I was going to say, I thought that stock went to about 400 because I questioned it here when it was around 100. But then after the whatever thing in early 2020, and this stock got up over 200 in here and it started going sawtooth, that's usually a sign, this right here, that it's peaking out. And so I was thinking, boy, short this baby at around 200. Oh, I would have been in some pain all the way up to 400. But then it fell off a cliff. So, and let's just look at what a couple others look like. So here's good old Facebook, now called Meta. They went to the metaverse and they went to the toilet. Up there in the 300s, fell off a cliff. And they actually bottomed. They're actually up off their bottom. They were down in the high 80s. So they've rallied 30%. So Facebook was down maybe close to 80% at one point. Still worth $339 billion. So $1 trillion company became worth $339 billion. So there was $700 billion worth of wealth lost. Oh, sorry, right here. Don't even know where. Oh, they moved these around because the market cap, whatever. Yeah. Well, now it'll look better. And here we got Apple. Apple's up today. Here's a 1 year on Apple. We're down 27%. Keeps trying to rally. $2 trillion. So it lost around $800 billion in assets. So not it, the equity owners, you people, and pension funds. Now here's the drawback. Pension funds and retirements invest in these big name stocks. So to have them go down, they don't invest in the Pelotons and the Zooms and stuff like that. Here we got Tesla over the past year. It was a party when it was up there at 400. I think it was over. Yeah, didn't it go to like 420 or 450 or something? So yeah, see there, that's in November. See, November of 2021, like I was saying. Man, that was some insanity. Look at that run up, pull back for one more rocket up. But, you would have protected or could have protected a lot of wealth, getting out last fall. And here we are going down $254 a share. It's lost $700 billion in market cap. And Amazon, let's see what a 1-year chart on Amazon looks like. Amazon here is down almost 50% now. Well, it was, because now we're into the fifth. It was worth $2 trillion at one point. So Amazon has lost $1.2 trillion in people's wealth. It's still got a 77 PE ratio. Boy, here's the scary thing on this Amazon. You know, if Amazon stops growing, still have fantastic sales, you know, in the tens and hundreds of billions. Let's say its profit margin just goes back to thinness like it was the first 5-10 years of its life, and we get a price to earnings ratio down in the 30 range maybe, you're talking it could still drop another 50-60% from here. That's Amazon at $40 a share. Ooh, that would be freaky. Where was it at in November? Oh yeah, you had lots of time to get out of your Amazon stock. Amazon popped during 2020 all the way up to 170, 180. Look at that. It hung out up there for 2 years. November of last year, look at this, right there, $184. You could have got out of Amazon at. So, just wanted to share that with you guys. Hey, if you would like and subscribe, that would be fantastic. If you want to share this video with someone, let them know that they're not in pain alone. I'm sure most, if not all, people owned some of these stocks. And you can always comment, and you can also message me. I actually had a decent year. I went defensive, and I was actually out of the market. Well, when I was out of the market, I was earning 4% on my money. Don't poo-poo being in treasuries or investments that can generate 3, 4, 5% on an annual basis with, you know, you can't say zero risk, but as little downside risk as possible. That is a decent way to grow your money when things are going down. That's if you follow Warren Buffett and a couple of the old portfolio managers, they always said, the ones I've been tracking stocks for 40 years, they said the way that the winners, the big time managers separate themselves from the little boys, they many years on the upside, they trail slightly, but they know when to exit and sidestep this stuff. So think about that. Like Warren Buffett, if you sidestep 30-40% losses, people might laugh at you that, you weren't making the big gains that they were, but you triple your money. So you go from whatever, let's just say 100,000 to 300,000. And you're just in these techie ones, okay? Triple your money in 3, 4, 5 years, but now you lose 40%, because this is only minus 32 because you got Costco, Home Depot, and Walmart. If you get here in the tech area, you're in the 40%. You've lost 120,000. You're back to 180,000. You're only up 80% on your money now. So now the guy who was only making 10-15% on his money, looking like a loser for 2-3 years, but in year 4 made 10-15%. I haven't looked at the exact numbers. I don't think I quite hit 20% gain this year. But it was close. It was definitely over 15% positive. And I'd just love to help people. So it's going to be a rocky another 8 years, I would say. And it's going to take some skill to have gains and growth out of this. All right, everyone, take care. I'll come out and make another video for you. Jump back in my playbook and look at what I was saying. I made 10-15 videos over the last year and a half that are specifically about investing. All right, take care, and I'll see you in the next one.